Um, Good evening traders, good morning, good afternoon. For every part of the day you're hearing me from. Zubo Luash AFS Academic. Like I've always said, this is on Sunday. So let's go with our top down analysis. Well, I'll be starting with gold. Currently, we could see last week gold really pushed up to some extent, pushing up to 4,245. Then sharply moved down back to 4,084. So let's go. This is my weekly time frame. Let me take the eye off next week. I'll be taking this my horizontal line to mark out the highest of last week. I'll take out this. Take out this to make my chart more clear. Then let's take the low. The low for last week was no drawdown, but a choppy pull to the upside. So let's come down to daily time frame. Let's check what the market is currently doing. On my daily time frame, the market is currently reacting from a breakout block. I think there should be a breakout block around the zone. Let's move more to the downside. But currently, what I'm seeing here on the daily time frame, I saw a break of structure here. There's a break of structure from this part. Sorry, I saw a break of structure here. There's a break of structure at this part. There's a break of structure. There's a sharp break of structure at this zone. Here, and this break of structure. Well, if you could check where the origin is coming from, there could be an order block around here that caused this push. So let's go down to a 4-hour time frame to align the order block that caused the break of structure. Let's go down to lower time frame to check the order block that caused the break of structure. Oh, I hope this could load fast. Yep. This is a 4-hour time frame, and if you could check, this is our general break of structure. This general break of structure is caused by this order block. This is sharping mode. I told you guys the last time. That if gold can break the resistance level that is really tapping on, that we could get a strong push to the upside. But we got no opportunity for the entry because once the gold breaks, it just make a straight impulsive move to the upside. So this is the order block that caused this general break of structure. Let me take out this. In this you could see we got two break of structure. In this we got two breaks of structure. This is first. We got almost three break of structure, right? We got this. This is a break of structure. At the same time, this is another break of structure. There are many break of structure that happens right in here. So we just stop in marking on that level that I marked. So seeing this break of structure, you can see the pullback. You can see the reaction. Look at the reaction. Just let's check the reaction. Check the reaction of gold. After making that strong pullback, see the reaction. Let's see the reaction. You can see the reaction just from this top. We could check the reason why gold have reversed for that top now to here. So let's check. Why is gold reacting? Because market will never react for no reason. If the market reacts from any angle, that means there is a reason why the market is reacting from that level. So if you could see why this market reacted here, the market is reacting from a break order block that become a failed order block. Why this market make this impulsive move to the upside? It left this order block behind on my 4-hour time frame. Leaving this order block behind. Then once the market break this structure, this order block becomes a breaker block. And then what did you see when the market get in there? Sorry guys. When the market get in there, the market reverts sharply to the other side and ditching almost 2000 pips. Almost 2000 pips, guys. Almost 2000 pips on the sell. So currently looking at gold. Gold is still to me, if I'm to trade anything on gold, I will still look for an entry to sell. I will still look for more entry to sell gold. So, and now if I could pick any entry to sell gold now, I'm seeing a break of structure to the downside. Oh, it's more like a break of structure because the market hasn't taken the nearest high, so it's more like a break of structure to the downside. There's a break of structure to the downside. If there is any opportunity for me, I'm just going to sell gold. I'm going to sell gold, guys. This is a break of structure to the downside, a sharp break of structure, and in this break of structure, we also have two break of structure here. We got two break of structure here. There's a breaking of structure around the zone. Yep, guys. So now this has done working. I'll just use this to give and some explanation for you guys. I'll be taking out this. So now let's go more to the downside. This is the resistance level I've told you guys last time I dropped a signal that if we could get a break out of this after this, we could see an impulsive move. So I catch some of this buy. I really catch some of this buy, and I take my profit on this buy. I think I catch the buy from this level, and then I take my profit around this zone. I take my profit around the zone. I take my profit around the zone. So now let's just go down to 1 hour time frame. Let's go down to 1 hour time frame. I want to see if there is any reason for us to take a trade. If there's any reason for us to take a trade. This is a double break of structure. Uh, and then look at this break of structure. I got an at this break of structure, I got a other block that become a breaker block here. The market should have respected and go back to the upside. But on this 1 hour time frame, it seems this breaker block has been medicated and now pushing back to the downside. So let's look for a way to join the continual trend, because I would like to trade this continual trend back to this support, to this resistance, and that becomes support. I would like to trade it back to this support level. Yes, guys. This is the trade I took. This is the trade I took on gold. This is the trade I took on gold, and this is where I close my profit. I think I close my profit just exactly this way. So on this reversal, I close my profit, and you guys could see if I couldn't have closed my profit, the market could have just taken me out, then make the strong impulsive move to my direction. So I took this trade here and I close up exactly here before after I saw this candlestick. Then when the market move up a bit like this, I decided to close up because I know there's something here. I know this other block of this 1 hour other block was things that is holding good to pull up. Then I decided to close my trade here. As you guys can see, this is the trade I took. I closed this up before it came back to it to sweep the lower liquidity and then push up to the upside. So let's take out this to make our chart more clean. So if you could see, gold is pushing down aggressively. I got this other block that become a breaker block because the market violated. Any other block that the market violated without respect is called a breaker block. I got this breaker. So just want to check where we can short in on gold. I got this breaker. What do you see the market do? The market rush and mitigated it and going back to the upside. So if I could check this my side, I think I got an entry. I think we can get an entry here. Seeing this break of structure to the upside, well, it got another block that has become a breaker block. It has become a breaker block. So So if I'm willing to take my trade, guys, after this break of structure, there is no any. I got a fair value gap. Just no, at the before this is before the break of structure, right? After the break of structure, there is no any other block with any fair value gap. The only fair value gap I have here, guys, is this fair value gap. So and the market is reacting from here. So the market could use this as my liquidity. The market could use this as my liquidity. Yes, I'm expecting the market to use this as my liquidity. Sorry guys. I said the market to use this as my liquidity, then trading back into this fair value gap. I would like to be taking my trade within this fair value gap, but I'll be putting my trade just exactly at the middle of this at the middle of this fair value gap. I like to take my trade. So let me just drop my setup. Let me just drop my setup. Let me drop my trade for you guys. Let me drop my trade for you guys. I would like to take a sell position. I would like to join the sell trend using this FVG on my 1 hour time frame. I would like to use this FVG, and I think this trade should be. I'll just target this resistance. I will not target too much, but target that resistance. Just keep my stop loss just here guys, don't panic, don't panic guys. We're gonna bring out some fun. I think this is a perfect setup for us to take, and then let's our stop loss be just exactly at this almost at the low of this candlestick that caused the fair value gap. So, and if you could check, this is 1 to 9 risk reward ratio trade. This is 1 to 9 risk reward ratio trade, guys. You just wasting 130 pips to catch 1,222 pips. You're risking 130 pips to catch 1,230 pips. So if I could go down to my 30-minute time frame for more confirmation, I like to just take my trade based on my analysis and based on my setup. So that is the zone I would just like to take my trade from, guys. That is the zone I would like to take my trade from, guys. For this, that is the clearest thing ever I could ever see. I pull back to this level, then I got my entry from this fair value gap. So instead of me using this other block, I knew the market has mitigated this other block. Then I was using the fair value gap because I still expect a reaction. I expect a sweep below this. I expect the market to use this as an inducement, because watching the market coming back from this place back to this place, there is no any liquidity pool there that the market would have ever swept. There's no any liquidity zone near the market. So I expect this market to use this as my liquidity, then run and tap into this my trade and ditch me my 1 to 9 risk reward ratio trade. So guys, I think I also got an analysis on GPP JPY. Let me check GPP JPY for you guys. I got something. I got something really nice to drop for you guys. Actually, I'm on a sell trade. Actually, I'm on a sell on GPP JPY. I'm on a sell on GPP, but I already closed my sell. Do you know why I closed my sell, guy? After the market reject from this resistance zone. After the market reject from this resistance zone. Actually, it's not every time that I wait for my full take profit. At time I will even close my trade before the market got to my TP. Whenever I saw a reaction in the market and it's a strong reaction, I always close my trade before the market got to the TP. I think I took this trade on 4 hour time frame. I think I took this trade on 4 hour time frame, and this really quickly react well. I just want to teach you guys something about how I got in on this trade, and I could give you what I have for you guys. Okay, this is my 4 hour time frame. And if you could check my 4 hour time, this is my order block. This is my 4 hours order block. My 4 hour order block. Then I have to refine it for a precise entry. Then I think I refine to, let me check my 1 hour. I think I refine to 1 hour. I think I refined to 1 hour. I think yes. Yes, so I refined to this my 1 hour order block. I got this break of structure. I hope you can see how I'm trying to identify. I got this break of structure to the downside. I got this second break of structure to the downside. The market makes some push up, but I've never come back to test this order block that had this small vertical gap. Then I traded from this order block. Then I put my stop loss just above this week. Then that is how I got in on my on my trade here, and after I got in on my trade, I quickly close up. Actually, my take profit is still way down. I expect GBP JPY to come back after this break of structure. You can see some pullback here, leaving out this fair value gap. So I still expect sometime I'm still expecting GBP to sell to this point. I'm still expecting GBP to sell to this point. This is the point I'm expecting GBP for. And if you could see, this could be a liquidity zone that could draw the market down to this side. But for now, let's see what the market has, and because currently GBP JPY is bullish. GBP JPY is bullish, as we can see. Let me take out this other block. Let me take out this as well. So currently GBP JPY is bullish, guys. GBP JPY is currently bullish, and if you could see, there's a break of structure here. There's a break of structure here for my 1 hour time frame. There's a break of structure here. I don't want to go far. I don't want to take you guys too far. Let me just make this happily. And then if there's a break of structure, then I need to see what causes the break of structure. It should be this other block. This is the other block on 1 hour time frame. Then I could see my possible entry just to join the market and push it just up a little bit before selling back to the downside. Let's just catch some sell because the market still got some order to pick at the downside before even moving way more higher. So this other block here, and as you can see, I can't place my trade on this other block. Why? Because the other block is wide. So I need to look for go down to my 30-minute time frame for a possible trade entry. Let me go down to my 30-minute for a possible setup, guys. Okay, fine guys. If I could see, I could take back this other block to this zone. You could see, I could take back this other block to this zone. But for some reasons, if as we have checked, GBP JPY has been filling each and every fair value gap, before even moving to the upside. If you could see this market coming, run into this fair value gap and fill this fair value gap, then what do you see? Reaction to the upside. If you can see the market run down into this fair value gap, what do you see? A reaction to the upside, leaving this other block that we are still expecting the market to come and clear out maybe some time later, but not now because the market is already riding from the FVG. So I prefer taking my trade from this FVG. This other block should still be there, but nevertheless, I'm not taking my trade from the other block. I'll be taking my trade from this FVG. Let's see, guys. I'll be taking my trade from this FVG from just here to here. This is my FVG. So I'm expecting the market to use this as my liquidity. I'm expecting the market to use this. Sorry, guys. Sorry. I'm expecting the market to use this as my liquidity to tap into my point of interest, to my POI. So then I'll be taking my trade. Prescribedly. You can take your trade anywhere from this FVG, but if it is about me, I'll be taking my trade just above this block of structure. Just above this block of structure. I got my reason why I'm taking my trade just immediately above the break of structure. My stop loss will just be somewhere here, but you can just put your stop loss just below this week. Let's make something reasonable. Let's just put the stop loss down there. Then sorry. Then I'm gonna take the market to sweep this high liquidity. I'm taking our trade from here. Yes. And guys, if you could check, this is 1 to 4 risk reward ratio. This is 1 to 4 risk reward. It's a sharp trade. This is a sharp trade, though. My stop loss is just still above the other block. I guess my confidence is that's why I'm putting my trade just in there. And then if I could place my normal stop loss, I should place it just below this. So, but because the fair value gap is still up to this place, then I was just trying to use this stop loss just for you guys. As you can see, you can just see this entry. You can just copy this entry and then paste it and watch the market. When the market open, check where the market is reacting from. Then you can just jump in on this. So this is Oluwaseyi FS Academy. This is just the 2 pairs I got for you today. And then if I'm coming back some other time, I'm gonna bring more things for you guys. Peace be unto you. Subscribe. Never forget, if this is your first time of coming across this channel, remember to like, comment, share, and subscribe to the channel so that whenever this kind of setup is dropped, you'll be the first person to be notified. Don't be left behind. Let's go together, guys.